Welcome to Markets Now. I'm Michelle Rook with KD Investors, Kevin Duling. Kevin, let's talk a little bit about the markets. We closed mixed in the grain trade livestock futures. We're pointing mostly higher, except for nearby contracts. But soybeans, we started off very strong. We ended well off of our session highs, not the best close there. So did we just run up into some chart resistance? Is that market looking tired? What's going on?
A little of both. We've had a decent move off the lows, and then today we hit the 1050 mark in the November, moved past it a little bit. I think that brought out some selling. The Brazilian weather that everybody's talking about, I think the end of the day, that's more of a corn issue than it is soybeans. Probably some people realizing that. Granted, corn closed a little bit lower too, but so no, overall, I'm encouraged. I think we've certainly turned the corner, but we're going to have some pullbacks in this thing for sure. So today was just the first one. So even though soybeans still closed up a couple. So
yeah, did we do any technical damage in your mind to the soybean chart?
I don't think so. No, it looks good to me. I mean, it'd been nice to have a stronger close, but we still, it's the highest close of the month. And then, what's a reasonable expectation of a correction? I don't know. Maybe we have to go back down to $10 again, or 10.20, somewhere in that range, and catch. And if we start seeing some more Chinese sales show up every day, and that should do it. I mean, I like I say, I'm encouraged, and the yield reports are not, they're below expectations. That expectation word is always a fuzzy one, because if they're expecting a record and we're still, does that mean if we're below that, is it still a record? Or, so there's a lot of movement in that, but overall, I think the trend is higher now. So
no doubt. And we're hearing a lot of yields maybe not as good as expected, as you had mentioned, and those expectations were really high. You mentioned Brazil weather as well. How much weather premium do we need in the soybean market this early in the season, do you think?
Well, it probably comes down to, the biggest concern is not so much the late arrival of the rains, it's just how dry the soil is. I mean, we're down to the lowest measurements we've ever had as far as soil moisture in that region. So, boy, we've got to have a pretty phenomenal year to get trend line yields in that region. So I think that's part of it. I think maybe a bigger part of the move was the U.S. Weather with their little flash heat ridge. But as we get further along, the corn market's going to be interesting, similar to last year. How do we deal with that safrinha crop? Is it going to be really late, or is it, how is that going to go? And so we've got a lot at play here with that Brazilian situation. So,
yeah. And you mentioned the corn market. It tried to follow soybeans early, but we closed lower. So not the best close there overall, right?
No, it had the potential to be a good looking chart. I mean, it was a new 1 month high. There was a kind of a consolidation range. We broke out above that today, and I thought, okay, that'd be a really strong day. And then we faded. Same with wheat. And the corn chart to me says, okay, we're just not ready. You've got the bulk of the hedge pressure, harvest pressure coming. You got some phenomenal yields in spots, and people are just going to want to take their money and run with this high input environment, high interest rate environment. So it's going to be a slow grind for a while. But again, similar to the other grains, I think we've turned the corner, and 2 steps up, one step back. So
yeah. What about the wheat market? How encouraged have you been here recently by what we have seen, first of all, from a demand perspective?
Oh, wheat's I'm pretty excited. It's been a long time since I've been this excited about it. I thought for sure we'd have a higher price coming into harvest or seeding, and we didn't. We're down here punishing everyone who raised it, punishing everybody who wants to raise it. It doesn't work on any balance sheet. And so we're dealing with 5 years of flat demand. And so usually coming out of something like that, you have a huge demand spike. And we're seeing that in the U.S. The Black Sea is going to run tight on grains about the middle of the third quarter. Europe's got quality issues. Australia had a frost, which nicked it some. So a lot of demand moving to the U.S. We're seeing a great pace of sales. White wheat's twice as fast, or more than twice as fast as last year. Hard red spring is a third better. Hard red winter is almost double last year's pace. So we've got great demand moving here, and you've got a really dry Black Sea. So that whole northern half is going to have establishment issues, and so to me that market looks primed. It looks like we could have a lot of fun here. So
the wheat market, though, have you been, I guess, surprised or disappointed that we haven't put more weather premium in? And how about war premium? It feels like the market is just immune to anything going on there.
right, I've kind of referred to this as the mystery seller. It's like anytime we get a port that gets close to getting hit or a ship gets bombed or what, and then the Black Sea can't plant or whatever it is, and we'll start to see some good buying activity, and it just gets hit, and it's just strange. It's definitely a different psychology, but at the end of the day, as long as we've got demand moving, that's going to trump everything else, and the cash price will pull the futures up if it has to, if futures can't lead. So that'll happen. It's just, this is September. We got a ways to go. We got to get into that Dece Jan before we probably get real excited. But I certainly like what I see on the fundamental side. So
what about technically? There again, it looked like wheat ran up into chart resistance, just kind of like corn did today. And certainly $6 is going to be pretty tough resistance, at least on Chicago, isn't it?
Oh, I think so. But I think it gives way pretty soon. There's just too many fundamental stories to hold this thing back too long. And you're so cheap. I mean, production costs are close to $7.25 a bushel for most. And, when you take the basis off, I mean, most people are getting, between over here, we're getting like 480 to, to 550, and that doesn't work for anybody at all. So yeah, it's definitely got it's got a long way to go to make money on this thing, but I think it does. And the technical sellers, the hedge funds moving out of it, I don't think they're gonna come back after it as heavy as they've been the last few years. I think that train is sailed, and that should change. So
what about the Fed cutting rates? There has been a lot of discussion about the managed money, that they were short the grains because of the higher interest rates. With those coming down, does that move money into grains? Do they view it as a value? Do we get index fund buying as a result?
Well, historically, the answer is yes. Historically, the answer is, when the Fed starts moving on rates and you've got an elevated stock market like we do now, where would you want to put that money from the sidelines? Do you want to put it on a record high stock market? Do you want to put it on, grains with a record low, or record high, I should say, gold to grain ratio, record high stocks, or Dow Jones to grain ratio, and your interest rates, they start sagging, then all of a sudden there's a lot of money off the sidelines that's coming. And so, yeah, I don't see the winds at our backs now. I think it's going to be a totally different environment than we've seen. Granted, we've got to get through some political stuff here in the short term. So
absolutely. What's your thoughts about, the news about China's economic stimulus? Is this going to change the tide for them, and especially bring some demand back to the U.S. or not?
I don't know. I don't see it as a big player. That didn't jump off the page at me as something that changes the fundamentals. I mean, they've been buying pretty briskly the last month or so, and I mean that's going to continue. I guess if anything, it just proves that they shouldn't have any reason to not continue buying, especially with Brazil getting postponed on planting. Yeah, so that I guess to me it's not a game changer, but it just helps kind of keep the breeze at our back a little bit.
Yeah.
So.
I mentioned cattle futures mostly higher on the day, except for those nearby contracts. And honestly, the cattle charts look really good. Do you think we can keep going here?
Well, based on the sheer numbers of cattle in the country, I think they can. Now, I'd be wary. I guess I'm nervous about the stock market. And this last little stock market hiccup we had, the cattle came right down hand in hand with it. The stock market rallied back, and the cattle only made it part way. So that concerns me, because I feel like the stock market's extremely heavy right now, is going to run into some heaviness here. So, the potential for cattle to do something like it did last September, October is real. So we definitely want to hedge this thing. I'm hoping we lose our hedge money on that, but I'm certainly not willing to go unhedged through the fall here. So, but no, I'm encouraged. I mean, if you look at the numbers, I mean, it should be another strong market for at least another 6 to 9 months. But there are some indicators that the tide's starting to shift on the cash cutout side. So.
All right. Well, something to keep an eye on for sure. But thanks so much for that update today. Kevin Duling with KD Investors. That is Markets Now.